Good morning, everyone. Welcome to our next webinar in our series dealing with the COVID-19 measures, where we're going to start looking at the exceptional tax measures which have been implemented over the last few days. By way of introduction, lockdown, President Cyril Ramaphosa's speech of 23 March. And with that, there was the announcement of specific tax measures. The explanatory notes were issued by SARS on the 29th of March of 2020. Draft tax bills were issued for public comment on the 1st of April of 2020, so fresh and hot off the press. Question is, are they exceptional? In today's presentation, we'll be looking at dealing with SARS under COVID-19. We'll look at the tax relief mechanisms which have been announced and issued as far as those draft tax bills are concerned. We're going to look at some VAT and customs issues, look at the U.I.F benefits, and then also look at some exposure as far as the penalty and interest provisions are concerned. Business unusual. I think from a SARS perspective, it's clearly business as usual. Nothing has really changed, and from SARS's perspective, the rules are the rules. In terms of our engagement with SARS, what we've obviously seen is a minimization of face-to-face. SARS pushing us to use electronic channels more heavily. Use of the SARS contact center being really important. I think, though, that for purposes of understanding what we are dealing with over the last 2 to 3 days, our experience with the SARS contact center has been that our staff, in trying to contact that contact center, are holding on the line for in excess of an hour, in some cases in excess of 2 hours, before we are having anybody respond to those calls. So extremely challenging from an environmental perspective in terms of trying to resolve queries with SARS through these channels. There is a dedicated email for tax practitioners, which has always been in place. And then we have limited branch service, which can be provided by appointment only, but that is only for exceptional cases of the utmost urgency. So even when we look at this aspect of engagement, really nothing much has changed other than a reduced ability to go in branch. And possibly to put this in context, what we received as tax practitioners was a letter from Edward Kieswetter. And in that particular document, these were his words: "I appeal to you to remain compliant by fulfilling your and your clients' tax, customs and excise obligations, even during this lockdown." So clearly just sending out the message that from a SARS perspective, it's business as usual and nothing really has changed. So let's look at what are the tax relief mechanisms. Firstly, we have an expansion of aspects of the employment tax incentive. There's a deferral of payment of employees' tax liability, a deferral of payment of provisional tax liability, a deferral of interim payments specific to micro business. There is an extension of certain time periods, and then there is a special granting of Section 30 and Section 18A status to COVID-19 disaster relief funds. Expansion of the ETI, the current position. Firstly, it was introduced in January of 2014. It provides a mechanism for employers to reduce employees' tax paid to SARS. Applies to employees between 18 and 29. Remuneration must be less than 6,500 Rand. It must be limited to a maximum of 1,000 Rand in year 1 of employment and 500 Rand in year 2, claimed via the monthly payroll tax filings, And so in principle, this is a mechanism that reduces the PAYE that is paid to SARS on a monthly basis. In terms of the relief mechanism, firstly, that's intended to assist employers to retain staff. It's there to reduce the risk of low-income earners who are at risk of their losing employment. It commences for the period 1 April 2020, starting 1 April 2020 and ends on the 31st of July of 2020. The amount claimable increases by 500 Rand per month to 1,500 for employees in year 1 and to 1,000 Rand for employees in year 2. In addition, employers can claim 500 Rand per month for employees who are in the age group 18 to 29, but are no longer eligible because the employer has already claimed on this employee for the standard 24 months. And then for employees who are in the 30 to 65 age group, who are not normally eligible due to their age. So there is an expansion as far as this is concerned. The increased claims will only apply in the 4 months specified, so nothing beyond. The employer must have been registered at the 1st of March 2020 as an employer and must be tax compliant. And I think this concept of tax compliance is something that you're going to see flowing through all of these provisions. The ETI payments then will also be accelerated in terms of SARS payouts from twice a year to monthly. Definition of qualifying taxpayer. This is probably the most important definition in terms of the new provisions. A taxpayer is defined in the Tax Administration Act that conducts a trade. That is the first requirement. So the concept of trade is vitally important. Secondly, you must have a gross income of 50 million Rand or less during the year of assessment ending on or after 1 April of 2020, but before the 1st of April of 2021. So what we are seeing is obviously that these measures are really being aimed at smaller business. The gross income that is generated in terms of that 50 million Rand must not include more than 10% income derived from interest, dividends, foreign dividends, rental from letting of property, and any remuneration received from an employer. So again, that is just pushing back to that concept of conducting of a trade. Again, has to be tax compliant. So tax compliance is vitally important in assessing whether you are going to qualify for any of the relief mechanisms which have been put in place. So the first measure is the deferral of payment of employees' tax. Really an alleviation of cash flow burden, and that's all that this is. So this mechanism, again, will apply only to a qualifying taxpayer as defined, and that's why I say that definition of qualifying taxpayer becomes incredibly important. You must be a resident employer or representative employer. You must have been registered as such by the 1st of March of 2020. The payroll period that is covered is the 1st of April of 2020 to the 31st of July of 2020. So just to understand, the first time that you can start deferring your payment would be the payment that you make on the 7th of May of 2020, which would cover your April payroll obligation. You are allowed to defer payment of 20% of that monthly liability, which fundamentally means you will pay 80% of your determined liability as determined in terms of your standard payroll calculations. Late payment administrative penalties and interest will not be imposed. The deferred liabilities, so that amount of 20% that you're deferring over these periods, will then need to be paid in equal installments over a 6-month period commencing 1 August 2020, So in other words, the first payment of the deferred liability would need to then be made by the 7th of September of 2020. What is really important here is that you must declare the full obligation. So when you're filing your payroll filings, you are still required to declare the full obligation. You are merely deferring the payment. So if you do not declare the obligation correctly and you understate that obligation, then potentially the interest and penalty provisions will be applied. And this is really important just to keep in mind. So you're not declaring obligation equating to 80%. You must declare the obligation at 100% and then merely defer the payment. And then again, in terms of the deferred payment terms, if you do not meet the obligations and pay the amounts required in terms of those deferred payment terms, then potentially penalties and interest will be applied. So this is the first relief measure. The second is deferral of payment of provisional tax. Again, this only applies to qualifying taxpayers. So again, that definition of qualifying taxpayers is extremely important. You must be registered as a provisional taxpayer. Excuse me. So this will only apply to provisional taxpayers. It will apply to a 12-month period. So that 12-month period will cover 1 April 2020 to 31 March 2021. You will defer a portion of payment of your first and second provisional tax liabilities. SARS again will not apply late payment and administrative penalties. So the first provisional payment due which falls within the periods from 1 April of 2020 to 30 September 2020. So whether you fall within this period will be dependent on your financial year end and as to when these first provisional payments are due in the normal course. But if these fall due within this period, you will then base your first provisional on 15% of your estimated total tax liability. Again, that estimation of total tax liability will be done in terms of the normal rules as we are all familiar with. The second provisional payments that fall within the period from 1 April 2020 to 31 March 2021, we will base on 65% of the estimated total tax liability. Again, applying the normal principles specific to how we are determining second provisional payments and then applying a 65% factor. In terms of settling the full tax liability, this will then need to be settled with the payment of the third provisional topping up, which is made 6 months after your financial year end. Interest will be levied on late payment of that third provisional if it is not made by the due date. So if we don't settle that full tax liability by the end of the 6 months period after financial year end, SARS will then start to charge interest in the normal course. Then when we look at micro business, so definition of a micro business is a natural person, or company carrying on business with a turnover of less than R1 million. Then what we will see again must be tax compliant, and then very similar provisions as far as the interim payments that micro businesses are required to pay. So covering the periods 1 April 2020 to 30 September 2020, those interim payments will be based on 15% of tax instead of 50%. For the second interim payment, which is due 1 April 2020 to 28 February 21, the payment will be based on 65% of the tax calculated instead of 100%. In the case of micro business, the balance will be payable on assessment, so they won't be required to make a third topping up. the balance will merely be dealt with at the point that the assessment is issued. Again, no penalties and interest will be levied. Those are really the financial alleviation provisions. Are they exceptional? That is debatable. But that is what we've been given, and obviously we need to make use of that to the best that we can, in the context that we qualify for those relief measures. Beyond those, what we have seen is an extension of time periods. So in this context, the time period is defined in terms of the Tax Administration Act, and in the context of the national lockdown perspective is that the days of the lockdown are not counted for purposes of calculating listed time periods. These time periods apply only to certain notices in terms of the Tax Administration Act, as have been specified. So there is a list of these. The majority of them really revolve around the dispute resolution processes and the dispute resolution rules, which is quite important because it does enable us in some of these dispute resolution processes, obviously, to defer the time periods in which responses to SARS have to be made, or alternatively, if those dispute resolution processes involved having to physically go into SARS, those time periods for attending those meetings have been extended to the extent that you exclude the period of national lockdown. These extension of time periods will also apply to customs and excise, specific to selected obligations in terms of the documentation requirements that are set out within the Customs and Excise Act, or particular due dates. Again, a list of those is available, but important just to understand that there has been some relief as far as timeframes are concerned. What is important to note, this does not apply to return filings or payments. So there are no extensions of time as far as these are concerned across any tax types, other than the ones that we dealt with earlier in this presentation. The COVID-19 disaster relief trusts, really these are defined as being any fund established for the sole purpose of disaster relief in respect of COVID-19. The impact of the provisions is that there is a streamlined special tax treatment, which on application, they will be deemed to be PBOs in terms of sections 10(1)(cn) and section 30 of the Tax Act, and therefore also qualify for approval in terms of section 18A. So these approvals will be accelerated, what that means is that the receipts by such funds will be exempt, and if they have been given the section, and similarly the donations made by the donor will not be subject to donations tax, and if those funds have qualified for the additional approval in terms of section 18A, the donor will be allowed a deduction that is still subject to the standard limitations within the Tax Act as they are as far as section 18A donations are concerned. So not specifically relief for donors in the sense that there is no amendment to that legislation, but what it is enabling these types of funds to do is obtain the PBO status and the section 18A status far faster, and keeping in mind that those approvals will then also only apply for a 4-month period from the 1st of April 2020 to 31 July 2020, after which they will expire, unless there is further amendment to the proposed legislation. I think what is important to keep in mind around legislation specific to the relief measures is what we have in place is draft bills, and those draft bills have been issued for public comment. They are not law as we stand today. They're all merely proposals, and this is just an indication of the environment in which we are operating. No specific legislation is factually in place. The indication is that these bills will be retrospectively enacted by Parliament when it reconvenes. Obviously, we're unsure as to when that may or may not be, but keep in mind that if we were to look at this on a purely technical level, this is not legislation. And then as a fourth point, just to reiterate that tax compliance is a base requirement for you to qualify. So if we do feel that we qualify for any of these relief measures, we need to ensure that all aspects of our tax affairs are compliant, all returns have been filed, and all tax liabilities have been settled. Otherwise, we don't qualify for any of these relief mechanisms. In the bills, the indication is that all of the amendments affected will come into operation from the 1st of April of 2020. So in the context of retrospective enactment, that's when that's the date when that will kick in terms of application. Important to keep in mind, and this is again why we come back to this issue of tax compliance being so important, as well as obviously meeting the other criteria that are set out, is that if it is subsequently identified on assessment that a taxpayer has applied the relief provisions but factually did not qualify, the interest and penalty provisions will automatically kick in. In terms of VAT and customs, very little. And in actual fact, what we have is another cash flow alleviation measure. It is specific to the import of essential goods as defined, and these will be exempt from VAT and customs. Essential goods are listed as being the following. So we have food, and certain products are specified. So fundamentally all food products, but excluding alcoholic beverages, animal foods and chemicals associated with food production. We have cleaning and hygiene products, and there are a number of those listed. We have certain medical supplies and equipment, and chemicals, etc., related to those, fuel including coal and gas, and then basic goods as far as airtime and electricity are concerned. And that's it. There is nothing else around VAT and customs. So very, very limited as far as that is concerned. When we look at unemployment insurance, and this has been dealt with fairly comprehensively already by Mark Humphreys from our legal team in his presentation as far as the legal and commercial considerations around COVID-19 are concerned. But there are really two fundamental relief measures. The first is the Temporary Employee Relief Scheme, which is TERS. Here, the employer is required to have closed their operations directly as a result of COVID-19. That closure must be for 3 months or a lesser period. The employer must have suffered financial distress arising from this, and in that context, they would then qualify for TERS. The benefits, the intention is that the benefits will pay for cost of salary of employees during that temporary closure, and they will be paid out in terms of the income replacement rate sliding scale, which is set out in the Unemployment Insurance Act. U.I.F will fund the employer directly, but the employer must be registered for U.I.F, has to follow the application procedure, and if you require assistance as far as that's concerned, we can provide assistance in that area, and the closure must directly be linked with COVID-19. The second unemployment insurance fund relief measure is the National Disaster Benefit Fund. Here there is again compensation for qualifying employees through this particular fund. It relates to the situation again where an employer is unable to pay employees for any period of the shutdown due to COVID-19. You again need to apply for the relief from U.I.F. The intention behind this and the explanatory memorandum deals with the fact that there is concern that if employees were to approach U.I.F directly, that it would overstretch the resource base of the Unemployment Insurance Fund. So the intention behind this is that the employer will continue to pay the employee and then claim this back from U.I.F. In principle, this would appear fine, but as we know, the circumstances that we're in, there's a reason why you're being unable to pay the employee. So cash flow becomes an issue, and we're unsure as to what sort of time periods we'll be looking at in terms of U.I.F actually paying the money back to the employer. The compensation will be at the national minimum wage. It is a flat rate, 3,500 Rand per employee, and it will be limited to the period of the lockdown of 3 months, whichever is the lesser. And then lastly, just to deal with exposure to interest and penalty provisions. As I said earlier when I started this presentation, the rules are the rules. And those rules are still in place. So if we get into a situation where we are non-compliant, the administrative non-compliance penalties and interest will still be applied, and that is not going to change. In this context, though, we could possibly request remittance of penalties if we consider Section 218 of the Tax Administration Act. And in this section, it deals specifically with this concept of exceptional circumstances. So we would need to argue that the reason for our administrative non-compliance arises as a result of these issues: a natural or human-made disaster, a civil disturbance or disruption, serious incident or accident, serious emotional or mental distress, certain acts by SARS in terms of processing errors or delays, serious financial hardship, and then they have this last point of other circumstance of analogous seriousness. Yeah, you know, if we look at the principles of COVID-19 and what we're dealing with, we would probably be able to fall within aspects of this. But again, it would be a matter of being in a position to link this to the reason for non-compliance. And as I say, at this point, SARS are of the view that in principle, it's business as usual, and that nothing fundamentally has changed in terms of the ability of taxpayers to continue to meet their obligations. In context of the exceptional circumstances, as I've said, it must have resulted in the taxpayer being incapable of complying with the obligation. So that concludes this webinar. I hope that we've shared some useful information to all of you. Please keep in mind we are fully operational in terms of our staffing and our capability. Obviously, all of our staff are operating remotely. But if you require assistance, if you require information or input, please feel free to contact us through the email channels, through the telephonic channels that are available, and we will respond. Please keep in mind our next presentation will be on Wednesday, 8th of April. That will cover the accounting considerations arising from COVID-19. And Please also monitor our website. We have a COVID-19 resource center. There is documentation which is going up on that on a regular basis, and it is informative. It covers a whole range of issues, please continue to monitor that website, and I'm sure that you'll find some useful information as far as the measures that are being taken, the areas that we can assist you in, and thanks very much for attending. Goodbye. Please keep well, keep safe. Thanks a lot.